For as long as any of us can remember, one number defined financial success: $1 million. It was the finish line, the magic number that meant you've made it. It brought up images of quitting your job, traveling the world, and never worrying about money again. Well, I've got some news for you. That finish line has moved. $1 million just isn't what it used to be anymore. In fact, if you're planning to retire on $1 million, you might be in for a rude awakening. Based on the Bureau of Labor Statistics' own Consumer Price Index data, the $1 million your grandparents might have dreamed of in 1990 has the same buying power as $2.5 million today. That's right, prices are nearly 2.5 times higher. So what happened to the millionaire dream? And what if I'll tell you that $1 million isn't life-changing anymore? It's just level 1. Let's be crystal clear. Hitting a 7-figure net worth is a massive accomplishment. It takes discipline, sacrifice, and a lot of smart decisions along the way. For decades, it was the North Star of personal finance. The media, the movies, our families, they all drilled this idea into our heads that if you could just get it to the $1 million mark, you are set for life. But that's exactly the problem. Your brain might be running on outdated money software. The world has changed dramatically, but the number 1 million is still stuck in a collective consciousness as the peak of the mountain. The reality is, many people who are millionaires on paper today don't feel rich at all. They might have a paid-off house in a pricey neighborhood and a healthy 401k, but they're still stressing about college for their kids, a surprise medical bill, or a dip in the stock market. They're often just upper middle class families in a high-cost areas who are still very much in the rat race. The truth is, $1 million has gone from being an end goal to being a milestone, a very important one, but a milestone nonetheless. And if you treat it like the finish line, you risk running out of money, freedom, and options way sooner than you think. All right, let's run the numbers. Imagine you wake up tomorrow and you've made it. You check your accounts and your net worth is officially $1 million. It feels like you won. But what you can actually do with it? Let's start with the most famous rule in retirement, the 4% rule. This was a guideline created by financial advisor Bill Banking back in 1994. His research suggested that you could safely withdraw 4% of your portfolio in your first year of retirement, adjust for inflation after that, and have a very good chance of not running out of money over 30 years. 4% of $1 million is $40,000 a year. That's roughly $3,300 a month, and that's before taxes. Now pause and think about that. Is $3,300 a month enough for you to live your dream life? For most people, that's not a life of luxury. That's a modest middle-class income that might barely cover the essentials in many parts of the country. Let's break down where that $40,000 a year disappears. So, even if your house is paid off, you are still on the hook for property taxes, insurance, and maintenance, which can easily eat up $1,000 a month or more. Then there's healthcare. Industry estimates from places like Fidelity suggest a single 65-year-old retiring now might need an average of $172,000 just for their own medical expenses in retirement. For a couple, that number jumps to an estimated $345,000, and that breaks down to thousands of dollars a year, and it doesn't even include major long-term care costs. Suddenly, that $40,000 is looking a lot smaller, isn't it? We haven't even touched cars, food, travel, or helping your family. What if you want to help a child or grandchild with college? Well, according to the College Board, the average published cost for just 1 year at an in-state public university is heading toward $30,000, while private universities can be over $60,000 a year. And finally, the silent killer of wealth: inflation. Even a modest 3% average inflation rate will cut your money's purchasing power in half. There's a handy mental math trick called the rule of 72. You just divide a 72 by the inflation rate to see how many years it takes for your money to halve. At 3%, it's about 24 years. So that $40,000 a year income will feel more like $20,000 when you're deeper into retirement. This isn't a what if, it's a mathematical certainty. Your money is a melting ice cube and you have to plan for it. Okay, if this is starting to feel a little overwhelming, take a breath. That's totally normal reaction. The point here isn't to scare you, it's to empower you with the truth. And if you're getting some value from this reality check, do me a favor and hit that subscribe button. My goal is to give you the modern playbook for building real, lasting wealth. And trust me, you don't want to miss what's coming next. So, if $1 million is the old dream, what should you be aiming for now? This is where we stop debunking a myth and start building a smarter strategy. The conversation needs to shift away from a single arbitrary number and towards three much more powerful ideas: your financial freedom number, cash flowing assets, and multiple income streams. First up, your financial freedom number. This is the single most important number in your financial life. It's the amount of money you need invested to cover your desired lifestyle indefinitely without ever having to work again. The calculation is surprisingly simple. It's often called the 25x rule, which is just the 4% rule flipped on its head. First, figure out the annual income you actually want to live on in retirement. Be honest and detailed, and once you have that number, multiply it by 25. So if you decide you need, let's say, $80,000 a year to live comfortably, you multiply that by 25. Your financial freedom number isn't 1 million, it's $2 million. And if you want to live on $100,000 a year, well, your target is 2.5 million. For many people, especially those in the cities or wanting a more comfortable lifestyle, many financial advisors suggest targets are falling in the 2 to 5 million range. The second part of the new playbook is to stop thinking about a pile of money and start thinking about cash flow. Truly wealthy people don't just have a giant bank account, they own assets that generate income for them. These are things like dividend-paying stocks, real estate that brings in rent, or a business that runs without them. The real goal isn't just to save $1 million. The real goal is to build or buy enough assets to produce passive income that covers your living expenses. When your passive income is more than your expenses, you are financially free. It doesn't matter if you're 30 or 65. And this leads us to the third pillar: multiple income streams. Relying on a single job for your income is risky, and relying on a single pile of savings in your retirement is also risky. The modern approach to wealth is all about diversifying your income. This could be your main job, a side hustle, investment returns, and rental income all working together. The more streams they have, the safer your financial house is. For generations, becoming a millionaire was the dream. It was simple, it was clean, and it felt like an absolute finish line. But the world has gotten a lot more complex, and our financial goals need to get a lot smarter. The value of that million has been eroded by inflation, chipped away by taxes, and devoured by the soaring costs of housing, education, and healthcare. Living off a $1 million nest egg today most likely means an income of around $40,000 a year, which is a world away from the life of luxury that number once promised. But this is not a story of doom and gloom. This is a story of free education. It's time to upgrade our financial software. Stop obsessing over the title of a millionaire and start focusing on your personal financial freedom number. Calculate what you actually need to live the life you want and make that your target. Shift your focus from just saving a static pile of cash to building a dynamic system of cash flowing assets and multiple income streams. The new goal isn't to touch $1 million once. The new goal is to build a financial machine that pays for your lifestyle with room for error and options for the future for the rest of your life. That is what real wealth looks like in the 21st century. Now tell me, what did you used to think $1 million meant? Let me know in the comments down below, and let's talk about what the new dream should be like. Click on this video right here and I'll see you there in a moment.